Hello, participants. The webinar will be commencing at 5. Hello, participants. We are waiting for everyone to join, and the webinar would be commencing at 5. Dear participants, we are still waiting for all the participants to join. So we'll be commencing in a couple of minutes. Namaste and a very warm welcome to all of you. Hope you all are staying safe and thanks for taking time on a Saturday evening for insights into. Let me introduce myself. I'm Vishal, who's a seasoned banker, have worked with companies like Amex, Stancy, and currently working with a startup NBFC. We have with us today Anuj Dikshit and Pooja Bisaria. Let me introduce you to both the panelists. Anuj has a wealthy experience of more than 20 years in the field of research and investment. He started his career as fundamental research analyst with a brokerage house and then moved to technical analysis. Later on, he worked as fund manager with diversified broking houses and is currently associated with LFS PMS as fund manager. He has been regularly airing his views on stock markets through various notable business channels like CNBC, CNBC Awaz, Z News, and FM radio. We also have with us the other panelist, Mrs. Pooja Bisaria. Pooja is founder of Winner's Zone, is a qualified chartered accountant and cost accountant, and is a seasoned finance professional with greater than 10 years of experience, and currently is partner in STM Associates, CA firm. She is also a visiting faculty to renowned educational institutes, including Nasi Munji Group, ICAI, and is being regularly called upon as a speaker on technical aspects. She is also a member of the Career Counseling Committee of CA Institute's Western Region and have been supervising ICAI offline classes in Mumbai. Her prior experience include working with diversified industries including telecom, NBFCs, manufacturing, media, retail, and healthcare. So the today's session, first of all, we will be moving on to Anuj, where we will be starting the webinar with insight on financial markets with Anuj. So, Anuj, the first question, which even I had when I was a student, was why should I be investing? I mean, I have so many fun activities to do. I mean, I can go and buy the stuff, etc. Go and hang out with friends. But still, why should I be investing? So, what are your views on this?
Hi Vishal, good evening everyone. Thanks for participating in this webinar and giving me this opportunity to interact with everyone through this channel. The question is very pertinent and very important that why should I invest? Whatever I am earning, I can just spend it and live my life, which mostly people at the young age when they start earning, they think like that. But basically, investment is done to face card to have some future benefit. It is basically you are sacrificing your current consumption just to make sure that in future any big thing or any bigger thing in your life you want to do, you want to save that money and invest it somewhere where you can earn little more. In this slide, if we talk about, just to give you an example, a person who is earning around 60,000 rupees per month, his expenses is close to around 40,000. So in all, he is able to save around 20,000 rupees per month. And this 20,000 rupees can be invested or can be spent. Now we just take a assumption that salary hike of a person, because if we are working, for sure there will be a salary hike. So if a 10% salary hike is happening and inflation is close to around 8%, if he doesn't spend, what kind of saving he will have after 20 years? If he started at the age of 25 and reaches to 45, what will be his saving? So you can see that if he just saved 20,000 rupees per month, and whatever his expenses are increasing as per the inflation, uh, there is second thing which he can do, is whatever money he is saving, he can put it in FD, he can put it in hard cash. The third option he has is basically to just spend that money, which probably all of us want to do that. Whatever we have earned is better to live life for this point of time. But so third option is basically travel, buying some luxury goods for yourself. And the fourth option is basically you can invest where you can earn more than the inflation or double the inflation. So I assume that stock market is somewhere you can earn close to around 15% per month. Fourth option will be investing through the stock market. So these are the four options for a person who is saving 20,000 rupees per month, and he will do so for next 20 years. What happens after 20 years? If he go as per the option A, uh, he will get only 1.9 crore. In option A, where he is just keeping all the cash, he's as our nani dadi used to do it, keep it somewhere in safe house. So he will be end up having 1.9 cr at the end of 20 years, when he will be 45, when he starts saving 20,000 rupees at the age of 25. In option B, where he is actually putting that money in bank and getting 7.5% interest, he'll be getting close to around 3.4 cr. So uh, that is something which is better for sure from option A. The third option, where you just spend the money, is basically you will not have anything left for yourself or after 20 years. So third is basically not there. We will not do so. But first option will give you 1.9 CR, second option will give you around 3.4 CR close to, and the fourth option, the equity market option or the financial market option, will earn him 6.7 CR, which is close to around three and a half times what he was earning when he was just keeping that money in his safe. That is where it is very important somebody to start saving and start deploying those that money in safe and good return options. That may be equity market, commodity market, whatever, but start investing somewhere where you can earn anywhere between 12 to 15%, and you can see when the age of 45 you reaches what kind of money you are left with. So it is why very important for anybody, for these youngsters, to save money and start putting that money from where he can generate good return, decent return. What is a decent return? Decent return is anything which is over and above the inflation. So if we assume the inflation is close to around 6.5%, FD is giving you 7.5%. So anything double the FD rate is a very good investment idea. So, and history has shown that whatever money or whatever investment done through the stock market has yielded much higher return than any other investment.
Oh, that's nice. So, you well said, Anuj, and you would also want. So, I heard about something called of power of compounding, and I think it was would have been implicit in the previous example when you were telling us. So, can you just maybe elaborate more on the power of compounding?
Yeah, Vishal. Actually, power of compounding. If we everybody must have heard about Albert Einstein. He said it. It is the eighth wonder of the world. Power of compounding. People don't realize it. That even changing a 5% return expectation, or in return expectation, what kind of money you will end up getting after a period of 20 or 30 years. uh, uh, Power of compounding is basically a thing is basically how long it will take for your money to get double, if we talk about talk in a simple way. So the rule of 72 is a very simple way to calculate that how long will it take for you to double your money on a given interest rate. So if we just we can see the AC in the slide. So in that we can see that 72 divided by interest rate will give you the number of years. So if you invest at a 5% uh, annual interest rate kind of product, you will end up getting, it will take around 14 years for you to double your money. If you just increase this 5% by 5% in 10 for 5 to 10%, then it will take around 7.2 years. In 20%, it will take just 3.6 years. So this is how, in how many years your money is getting doubled. It's not like it will give you the exact figure, but more or less it will give you the same thing if you just calculate it mathematically. So power so rule of 72 is very important whenever you are investing, that what is my return. So if somebody says that, okay, I'll double your money in 2 years, I'll double your money in 5 years or 6 years. So it means he is suggesting that he'll give you close to around 12% return to you. Number of 72 divided by 6 is 12. So that is what he is expecting as a return. And if we go to the next slide, there we will find that if this thing is done on continuous basis for a period of 10 years, 15 years or 20 years, what kind of money one can get. So in this you can see, if a person is investing 5% annualized return product, it will take 20 years for him to close to around 2.7 times of his money. It will take in 20 years. So whatever money he has invested, he'll get around double of that money, 2.7 times of that money in 20 years. But if the rate of return from 5% to 10% is taken, in 20 years his money will be 6 times. If this interest rate goes from 10 to 15%, in 20 years his money will be 16 times. That's the beauty of power of compounding, and that is why Einstein said that this is the eighth wonder which people don't realize. And mostly investor who are investing in this market, they keep it as a thumb rule for them. Any investor who is coming into the market, if he is saying that, okay, I'm happy with the 18% return, basically he is happy doubling his money in 4 years. It's the simple.
Actually, very easy. You have put it in a very easy manner, and it's a ready of compounding. I mean, I do hear people saying, I will do double your money in this much time. But I think if we have a consistency, that's something which we can do over a period of time. Something nicely
Yeah.
done. What are the aspects, Anuj, which you would be considering, before investing? So I remember when I was initially in starting to invest, I wanted to know what are these aspects which I should consider before investing, and what are the various alternative of investments where people can invest.
Vishal, that is very important for anybody who is venturing into a stock market, and especially who is venturing into any product where he is expecting there's some kind of higher returns he should get. The most important things which one should look at when he is investing in any of the product can be classified in four things. The very first thing is return. That how much money you expect, that how much return you expect. Do you expect 10% return? Do you expect from this product 20% or 30% kind of return? Your expectation can be anything. We'll talk about that later, that when an investor comes into the market, his expectation is around 15 to 18%. When a trader comes, his expectation is 30. If a speculator comes, his expectation is 50% in a year. So expectations are totally different. So this is the first thing when we should look at when we are evaluating different investment products. The second thing is the return expectation is not bad, Vishal. The important thing is that how much risk you are ready to take. Because remember one thing, return is always proportionate to the risk. The higher the risk you will take, or higher the return you want, the risk is much higher in that product. So that is for sure that you build your return expectation, but be rest assured that if you are talking about a higher rate, higher return kind of scenario, then your risk is much higher. So first thing is return expectation. Second is how much risk you are willing to take. The third comes, which is very important, is liquidity. Yeah, it's not like that I have calculated my return, okay, my expectation is good enough, I am ready to, okay, I'm ready to have a 15 or 18% kind of return. I have calculated my risk also, that okay, 15% return is okay, so I'm ready to take that 10% kind of risk in my investment. But the thing is that when you want to encash that investment, whether the liquidity is there or not, as an investment idea, real estate is a very good investment. Yeah, it should be done. Many people have invested and is still investing in real estate. But the third aspect of liquidity is something which doesn't match, because when you want to sell your real estate property or your real estate investment, it's not easy to sell it. So in just one go you cannot sell it. It takes if not year, then months to sell a good property. So real estate investment is also one investment, but then liquidity is a problem. On the other hand, if you see, if there is gold or if there is equity market, liquidity is not such problem. You can sell your gold by going to any jeweler shop. You can sell your equity investment any time, before 3:30 every day. Anytime you can sell it in market. So liquidity is not a problem in the stock market also. The fourth, which I will look at as a person, is the convenience. For me to invest somewhere, I'll take another real estate example only. Convenience is not that high. It's not easy for me to find a good property. What is the prevailing market price? Whether I'm paying higher rate or not, that that you don't know. You have to go through a broker, and it's not easy to buy or sell a property or a real estate thing. On the other hand, if you want to buy or sell in share market, or if you buy and sell in mutual funds, you can do it so easily. Yeah, it is just in your mobile app. Now most of the brokers, most of the online broking houses are providing these services. So that is also one very important aspect when you are doing your investment, that how convenient it is for you to get into that investment and to get out of that investment.
Sure. And so, what are the various alternative of investments which people would be having?
Yeah. Actually, I should have taken it earlier. But there are various alternatives available, Vishal. I talked about. I'm an equity market guy, so I'm talking about share market. But other than that, there are debt markets also. There is mutual fund investment. There is bank FD. There is gold. In you can invest. Real estate you can invest. In post office, 8% or 9% kind of schemes are there. So in that, in RBI bonds, so there are various avenues are available. In all these avenues, you should look at the four things which I talked about earlier. What is the return? What is the risk you are taking? How is the liquidity? And what is the convenience? So these are the alternatives which alternatives available for you, and these alternatives should be just in four of these aspects, and then you should start in deploying your money in different investment classes.
Couldn't agree more with you, Anuj. I completely agree that the risk and return, the convenience, liquidity, these goes hand in hand. And from these, we need to identify amongst the bouquet of products which are being offered to us on a daily basis from the banking and the insurance world, and to come up with our own portfolio. Uh, yeah, that's a tough question, but yes, we evolve over a period of time. The next question, which again would any starter would have, and even I sometimes had that question in my mind when I started investing, was our stock market safe? I heard that we may suffer a loss of capital. So should we be investing in stock markets?
Are stock markets safe? Very difficult call. No, I'll not guarantee it. They are safe. In the short term, they are not at all safe. You can be burnt like anything. People must have witnessed in 2008, and recently people have witnessed it just 2 years, 2 months or 3 months back. So if somebody is coming 2 months back in the month of January or in the month of February, for him looking at 12,000 market and then in 1 month coming all the way down to 7,500, 500 point, 5,000 point correction, no, it doesn't look safe. But that's a very short span. Safety of a stock market will always be dependent for how what is the time period you are giving for your investment. If you are giving a very short term kind of time period for investment, then stock market is not for that. You have to look in investing in market for a longer term perspective. You should look at it that this is something which is going to give me that compounded 72 rule which I talked about. Based on that, this is something in 15 years going to give me that kind of return. In 20 years, it is going to give me that kind of return. Only based on that, that you can build that kind of portfolio, or you can have your investment in a stock market. But if you are coming in stock market for just 6 months or 1 year kind of time frame, or maybe 30 days, or no, I have this money for only 2 months, so I will give this money in a stock market. No, it's not as advisable. So if when you are coming to invest in market, then you come with all proper precautions, and have this thing in your mind that this money which I'm investing in this market, I will need this money 5 years, 10 years, or 15 years down the line. So that is very important, that when you are coming to invest in stock market, especially direct equity investment, or you are coming through mutual funds also. I'm not
Yeah,
talking about only about direct equity investment. Even if you
sure.
are coming with your equity investment through mutual funds, through other schemes, but you should have a longer term time frame. And this time frame, I'm not talking about 1 year. For me, as a fund manager, 1 year is nothing. It's a very short span of time. I look for 3 years, 5 years, or 10 years kind of stories. So that's the way
Completely.
any investor should look at it when he is coming for this market. If he is coming for a very short span of time, then he has less time, and then he is not a investor. He is not an investor. He is basically a trader or a speculator. And
Yeah,
trader
I
and
completely
speculator is totally different ball game from an investor.
completely agree with you. Couldn't agree more with you on again on this, Anuj, and why it's important to give time. It's just like looking at an FD or a real estate investment, that over a period of time, how much it multiplies. And if we give the same patience to stock market, we see the wonders happening. And we have live examples like Warren Buffett, Rakesh Jhunjhunwala, whom people have been saying. But it's the sheer patience which pays out. Now coming to the next question, which comes emanates from here, people who are, like when we see Warren Buffett and Rakesh Jhunjhunwala, we think what they do exactly, and what are the things they do look at, so that they have a very nice portfolio, how they construct their portfolio. So, what are your views on portfolio construction?
Uh, yeah, Vishal, that's true. You have taken big names of market, and these are the people who have actually made their own investment class who have made lines of followers behind them. People are following them left, right, and center. There are many books written on them. Rakesh Bhai to is our own community people from India itself. But in Warren Buffett, everybody knows that what kind of investment he has done. Can you imagine his investment like Coca-Cola and all are running his portfolio for last 25, 30 years? And that is the money, whatever money he has invested Coca-Cola, and 10 times of that money he gets as a dividend only. So that's the important thing, that when you are investing in market, when you want to be Rakesh Jhunjhunwala, and when you want to be what you say Warren Buffett for equity market investment, then you should have a patience, and you should have that capability to build that portfolio. The portfolio building exercise is very important. So if I talk about that, how a good portfolio can be built, so the very important thing in that aspect is the diversification of your portfolio. A portfolio is basically, if I tell you simply, it's basically creating a one day team or a T20 team or a test match team. So the portfolio of a test match, the a test match team will be totally different from a T20 team. The players which you want in T20 team will not be the players which you want in test team. That's the way the portfolio construction should be looked at. If you are looking for a longer term portfolio, then your portfolio should have a mix of large cap, small cap, mid cap sectors, some emerging ideas which will give you those which will multiply your portfolio returns over a period of 4, 5, or 10 years. So those ideas should be in portfolio. You should diversify it. You cannot put only all your eggs in one basket. So for sure, you cannot put only 2 or 3 stocks in your portfolio. You should have at least that 12 to 15 stocks in your portfolio. They should come from different industry, and you should analyze them. You should do your own research on them, and then the selection of these stocks can be done. Now, in my view, anything above 15 to 20 stocks, maximum 20 stocks should be there in your portfolio. You cannot have a portfolio of 50 stocks or 100 stocks. Better, if somebody wants to do it, then it's better he give his money to a fund manager, to a mutual fund, start investing through a mutual fund, because he is the guy who is looking at it. But as a person, if you want to build your own portfolio, then you should not have more than 20 stocks, because you cannot look more than 20 companies at any given point of time. So diversification is important. Knowing your company is the second most important thing. What does your company do? These are the things which you should look at. You just cannot buy or invest in any stock based on the tip. Tip comes and goes. That's a part and parcel of stock market, but one should be very careful on these tips business. I'll surely say that tip is not bad, but when somebody is telling you that this is something you should buy for investment, at least do so some of your basic research and then build a portfolio. And don't build your portfolio on all the tips. You should also have some good companies, some good name, because these are the companies which gives stability to your portfolio. Second thing is important in portfolio construction is your investment style. Who are you? You are a value investor, you are a growth investor. On what aspect you want to play, whether you want to take for you one year is more than enough, or you are ready to l- invest your money in a good company for 5 years. So you should know about it, and you cannot build the entire portfolio based on 5 years or 10 years plan, because because market keeps on changing, sentiments keeps on changing, environment in which these companies are working, they keep on changing due to government policy, due to anything. So you should keep on visiting your portfolio stocks also, that how they have performed in last one quarter, how they have done. So this thing also be done. um, Stop losses and odds versus target, that is also very important. It is your investment should be, as I said, that there should be some good companies, some large cap ideas, some small cap, some mid cap ideas. But you cannot have a portfolio of all small cap companies thinking that all of them or any five of them out of these 20 will give you multiple return. So you will build the entire portfolio based on those small caps things. No, when you are as on your own, if you are doing your investment, then you should have a part of these kind of ideas. Otherwise, you should always know that what is the risk you are taking. If you are buying something at 100 rupees, what is your view on that stock, whether you are expecting it to go to just 120 rupees or you are expecting it to go to 300 rupees. If you are buying at 100 rupees and expecting it to go to 120, then maybe a possibility of 10 rupees risk is more than enough. But if you are buying it 100 for 300 rupees, then if 100 becomes 75 also, you should not be worried. That's the thing which I'll say that to people who are coming into strong market, even at these times after this correction, that if you're buying a good company, then keep that good company for investment purpose, and make sure that for target you are buying for, because only then you can decide that how much loss you are going to take. That is your risk, what we were talking about, risk and return. So if you are expecting three times return, then 25% risk is okay. But if you are just expecting 20% return, then maybe a 10% or 5% risk is more than enough. So one should be careful about those stop losses and targets. And basically, stop losses and target thing which works for traders and speculators. This is a totally different pedigree of market participants from investors. So stop losses and targets are basically for those people who are coming or participating in market as a trader or for a short term basis. And you should also know it, when to buy, when to sell, and when to hold. There is your best of the idea can do very well in the market, but if you don't know when to sell that idea, when to book your profit, then maybe those, if you don't know to book your profit, then those profits will remain like book profit. So in your books they will look a profit, but over a period you will see that okay, something from 100 to gone up to 500, and now again back to 100 rupees. So you should be aware that when you are buying something, that for what target you are buying, and when you should be selling it also. That is also a very important.
Sure. So, Anuj, this is again insight, and I think practically every one of us who would have been into the investing world would have experienced all the factors while we construct our portfolio. I do see that you say that you do your own research. So, what exactly do you mean by research in this space?
Yeah, so Vishal, when I talk about do your own research, basically we can divide research. What is the basic of research? Wherever you are investing, you should know why you are investing, in which company you are investing. So these are the basic things: what business that company does, what kind of profit that company makes, whether they make any profit or not. So these are the things we should. Any person who is coming to invest in market should know about it. Now, the research can be divided into two parts in equity market. One is fundamental research, one is technical research. If we talk about fundamental research, it is basically the things which I just talked about. to know the business of the company, to know what is the management of the company, what are the products of the company, how the company is performing for last 3 years, whether it is making any profit, whether it is giving any dividend, whether there is any what you say any particular product which is where it has a 70%, 80% kind of market share. So these are the fundamental aspect. Uh, when you analyze all these things, so this is a time consuming process, and it takes hell lot of energy of a person to analyze a company based on fundamental side, because then you have to not only analyze that company, you have to analyze the industry in which it is operating, what are the government policies are there, whether the changes in government policy can make it difficult for this company to survive or not. So there are a whole lot of aspects when you do a fundamental research, then
Sure.
you should look at it. On the other hand, if we look at technicals, then technicals is something which is a very quick study, which people think it is a quick study, but if you want to do it in depth technical analysis, then also it takes a lot of time. But for a trader or for a speculator, it is a quick study. It is something you are analyzing the charts, you are looking at the pattern, you are looking at the price and volume, because technical guy thinks that whatever news, good or bad news about that company or that sector or that economy, it is there in the price. So price
Sure.
is reflecting all the good and bad news. So technical is basically when you analyze the price, volume, patterns and all, whereas the fundamental, you analyze the top line, bottom line, profit margin, and based on that you actually arrive on your investment decision.
Sure. Great insight again. Both the analysis very important, and what mindset we are doing the we are entering into the market. So maybe you might have covered, but yes, if I would just to ask you with a one single line difference between the three participants of the market, which are like investor, trader, speculator. That's what I generally hear from people. So if you could just in a summary tell me what is the difference between all the three sort of market participants.
Yeah, when we were talking about, then we talked a lot about these investors and traders and speculators. Uh, these are the three pillars of a stock market. Investor is someone who actually buys a stock and keep it for a longer time frame. He wants to buy, hold, and sell. This is the thing which an investor want to do. On the other hand, if you look at a trader is a person who is looking for that short period return and is ready to take higher risk. Investor doesn't take that kind of risk. He is not willing to take more risk than what he can invest. Whereas traders, if he is ready to put 100 rupees in market, he is ready to take a risk of 500 rupees. That's the basic difference between investor and trader. Trader is a person who is not happy with 15% return. He wants more and more from market. He wants 15% or 20% return in a month. So that is the big difference between a trader and investor. And a speculator is somebody who is looking at in different time frame, looking for different opportunity where the the extreme level of sentiment has reached. Maybe they, they can be bullish sentiments or they can be bearish sentiments, but he wants to make money on those extreme bullish or bearish sentiments, taking a totally different position from the market. And he is also, as a trader, he is also taking big risk. So the risk appetite for a trader or a speculator is much higher than the investor. The only thing is, when people enter into market, it's very difficult for them uh, to know in first trade that who they are, because that is your psyche. A trader mentality is totally different from an investor. So when we invest in market, we come that okay, I am buying this thing for 10% or 5% return. I'll buy at 100 rupees, I'll sell it at 105 rupees. I'm buying it for 5 rupees. But if it comes to 95 rupees or 90 rupees, I just become an investor and I say that okay, I'm holding it for long term. So investors sometimes are those traders who have become a forced investor. But investor is a person who is ready to take a small risk in market, in the sense whatever his risk appetite, and he is happy with 15 or 18% kind of return. An
Sure.
investor is a person who invest in market and make money over a period, and trader and speculator are there for a very short period. That short period could be anywhere between 15 or 20 minutes to ranging from for a month or 2 months, not more.
Okay. Okay. Great. Okay, so again, good to hear that. What are the difference between the three types of market participants? Now, coming on to a very common question, which I think many of us would be having in our mind. So, while we do investment or trading, what are the sort of common mistakes which you would have seen, and say with your 20 years, more than 20 years of experience, you would say that these are the mistakes which generally people make, and maybe that's something where they need to focus.
Uh, yeah, so common mistakes, as we talked about earlier, is you don't know where you are investing. You don't know the company in which you are buying. Actually, when you are buying in share market, when you are buying in equity, you are buying a very small part of that company. You are becoming a part of that company. So when you are investing, one should be very careful, or at least know that in which company he is buying, what the company does, how is the top management of the company, what is the nature of the business, what are the profits it is making, what are the projects. At least this much you should know about the company. So that is why I'm saying that even if you are getting, all tips are not bad, but at least you should know that somebody has given or told you to buy that company. Do your some small research and find out that what company does, how is the management pedigree of. People don't do it, and that is the biggest mistake, that you don't know in which company you have given your money, or you have invested your money, how the businesses are doing. That would be the first very common mistake. The second common mistake which is made in market is the price. Okay, something is good. Uh, just to take a name, like Hindustan Unilever or Reliance Industries or anything, these kind of big shares, they are always good share. Infosys, they are always good share. But with the market condition, with their sentiment and with their results and all, just check that how this company has performed. It's not like that somebody is telling you to buy something and you are buying when because of that news the stock price has already gone up. So once the news will be out in market, the price will correct. That is a very what you say, very well known saying in market, that buy the rumor, sell the news. So if somebody is giving you a tip that okay, you buy this, so at least know that because of which reason the buy was given, and whether this reason has already come into the market. Because once the thing is out, the price is surely going to correct. So the second mistake which is made by people is basically they don't know at what price that they are buying, whether they are buying at very high price and low price, whatever, what is their margin of safety. And that is where what I said is very important. So at least do your own research, that what you are buying and what price, how the company has performed in last 1 year, 6 months, 2 years. So these kind of price performance will also give you an insight about your investment.
Sure. And if I was to summarize, what are the common mistakes in the trading side?
ट्रेडर्स से तो विशाल बहुत सारी मिस्टेक्स होती हैं. दे आर what you say, traders make a lot of mistakes and they learn from their mistake. A good trader is a person who learn from his mistake and then take a step to correct that mistake and not to repeat it again and again. I am in this market. I still say that when I become a trader, uh, uh, for a part of my portfolio, there are mistakes which I do, and I still keep on learning them. The basic two problems which trading community makes is timing and objective. Timing is basically, as I said, that what time you are buying, whether it is a whether the news has already come into the market, and after coming that news, if you are buying that this is a good news, on this good news I should buy, then it's very difficult to make that money, make money. So the direction is not only enough. It is very important for a person to know and when to buy. The timing is very important for any investor. And the second important thing is practice and patience. Traders should be very patient, in the sense you are just sitting, you have your predefined criteria as a trader, that this is something, when these are the three four things are going to happen, only then I'm going to buy this stock, and you will wait for those four things to happen. Out of those four things, if only one thing is not happening, then you will not buy that stock. So and you will not enter into that trade. So the patience is important. Sometimes you think that okay, some stock is good at 100 rupees, and your system or has not given you a buy, and still the price goes up. You think that okay, मैंने तो बोला था प्राइस तो ऊपर जाने वाला है और ये ऊपर चला गया, लेकिन सिस्टम, अगर इफ द सिस्टम इज नॉट टेलिंग यू, then you patiently wait and wait for it. And once that come into your buy or sell zone, you just take a trade. So and people forget it mostly. हम लोग पेशेंट नहीं होते इतने, कभी कभी क्राउड के साथ, हर्ट मेंटलिटी के साथ we keep on doing these mistakes. As a person, as a trader, I still keep on doing it, but trying to reduce it. And that is my advice to anybody who is coming to this market to become a trader or a speculator, that you should be patient, and define your criteria when to enter a trade, define your criteria when to exit a trade, and just make sure that you follow that criteria to the T.
Completely agree with you. Knowing the company and knowing the right price, a common mistake which people don't take care in investing, and timing and objective and practice and patience, common mistake in trading. Well said. Uh, with the experience which you had, Anuj, over a period of time, on the historical movement, would you like to throw some light or highlight couple of stocks on what how this analysis etc. helps? So, would you want to take some examples and tell our friends something more on that?
Yeah, there are some of the historical investment ideas. I'll just share two of them. One is a very well-known bank; everybody knows it, Kotak Mahindra Bank. Uh, on those criteria which we talked about, when you are doing, because these are the shares which we invested at around 300, 400 levels, and in 2016, and we saw the entire 1700, 1800 kind of move. We booked our profit also. As I said, that in investment is not buy and hold only. You should also know that when to book your profit. Otherwise, those book profit will remain as a book profit. So we bought them. So there are success story. There are some mistakes also. So Kotak Mahindra is one of that idea which we looked at as an investment purpose. We bought it at around 400 or so, exited at around 1600, making four times of our money over a period of over a period of 3 years, 3.5 years. So that is one idea which I can share with you. The other idea which I would like to talk about is the mistake which we did, and we entered at not much higher prices, but entered at thinking that something is going to go well with the company, and but things did not work out that way. That is Sun Pharmaceutical, again a company, a good pedigree, good management. Company is into pharma sector, known to be a defensive sector, but the entire sector has not performed in last 3.5 years. So this is one idea which did not perform, as we entered in that idea around 850, 900. And as I said, that there was a level when we exited also. So that's the risk, that's the maximum risk we can take. So uh, as I said, that as I'm a fund manager, I look at fundamentally also, but as a technical analyst, because I have worked as a technical analyst for last 20 years, price is also very important thing. So uh, when something, when fundamentals are saying that everything is good but price is not telling you, then I'm the person who will prefer to look at the price and take a call based on technicals. And we exited in loss in Sun Pharma, and now the stock is doing very well. Everybody is talking about that pharma sector after this COVID-19 problem is one sector which in India most of the FIs and everybody is looking at. So again, it is a good sector. It is a good company. Can it be looked at again at a 450 or 400 level? Yeah, for sure. For investment idea, it can be looked at. But this is the idea which we invested at higher levels and we exited also in loss.
Sure. I think we learn from both our wins as well as somewhere when we fail. So it's very very important to limit our losses, to conserve our capital, and to exit at the right timings. That's what the base learning come from the markets. Anuj, now I have a very specific question. Is it the right time to invest in the market? I mean, that's a question which comes across my mind, because whenever I see the market, I feel that, this is too priced, or I will say, currently it's falling. So is it falling? So how do we identify that?
Yeah, at these levels, after a correction from 12,500 to 7,500, it's a very obvious question whether this 9,500, 9,600 level is a good time to invest. Remember, we are talking about investment. So for sure, I'm not talking about next 6 months. I'm talking about investment for next 3 years. I'll say this is the good time, and even better time are coming for investment. When I say a better time are coming for investment, believe me, investor love bear markets, because then you get cheap, best of the things at the dirt cheap prices. So this is the market where you are getting some of the things which are very reasonably priced. With market correction, some more sell off can come in, whether market can fall from 9500 to 8500 or 8000 levels in coming months. There is a distinct possibility, because we are not out of COVID. COVID was one reason. There are so many problems which are turning, but surely Indian economy will come strong. But we are facing some challenges, and these challenges will be shown in the July and July quarter. I mean June quarter results. When July they will start coming. So I'll say that for an investor, it is a very good market to invest. He should start investing. If he was good to think about investing at 12,500 level. Today you are at 9,500. Why should not invest? The only thing is where you should invest, because every new bull market will have different sector. You should know about those sectors. You should invest in those sectors. In previous bull market, what sectors did perform, in the next bull market they might not perform. They will just remain performer. But you have to figure out the outperformance of the market. So it is a good time to invest. And in market, I remember when I started my career, my boss used to tell me that he heard it somewhere, or that was a saying of somebody, that May is not a good month to invest in market, but so is January, February, March, April, June, July, August, September, October, November, December. All these months are also not good. So if you are thinking that zero risk, taking very minimal or zero risk, I can invest in market, no, it is not possible. It is a risky class of investment. But if you take calculated risk, if you take good investment bets over a period of 3 years, 5 years, this is the best time, and the best time are coming to invest in market. That is what I keep on telling all my clients, everybody, that don't don't be in a hurry, but start deploying money in this market. In next 6 months, whatever money you deploy, and you just sit on that investment for next 3 years, you will see your portfolio will be 2 times, 3 times, or 5 times.
Sure. Very well said. Very well said. Anuj, are there any selected investment ideas which you would like to share with our participants, given that you generally have some good ideas coming in the mind?
Actually, when we spoke last night and you were talking about it, so I thought that whether as a fund manager will it be a thing for me to say give those investment ideas or not, because it's better that I talk about the sectors, that what are the sectors as I talked about. आप सिर्फ एक या दो अच्छे सेक्टर्स को पहचान लीजिए और उनकी बेस्ट ऑफ द कंपनीज में इन्वेस्ट कर लीजिए. अगर वो अच्छे सेक्टर हैं, एंड if they are the sector which will boom in next bull market, you will make a lot of money. So for sure, I'll look at sector specific basis, like in banking and financial services. I like IDFC First Bank and SBI. These are the share which I believe are good investment ideas, yeah, at these level. Pharma is one sector which everybody is talking about, and even we are bullish on these sector. We have taken some previously we have taken some other pharma stocks, and that is one JB Chemical and Pharma is one pharma stocks which we are looking at. Any correction should be a very good opportunity for us to get into this stock. Rallis India is again Tata Group company. Godrej Agro is again Godrej Group company. Both have good pedigree of management. We know the businesses and all. So in and agro sector is what we are looking at, because as Pradhan Mantri Modi ji has come up with so many things on agricultural side, I believe this is one sector which could do very well. Gold is also a very good investment idea. So we are also looking at gold in the form of ETFs, where we can invest. So because we believe in coming months, or coming at least 3 to 4 quarters, gold is something which is going to give you a much better return than the equity market, because equity is in investment mode. Gold is already running, so gold is in that bull trend. So gold is certainly a good idea. And from IT sector, which I believe that so many things are changing now, people are sitting at home and doing different business ideas backed by the IT, artificial intelligence, or everything is coming in that sector. Also, we are bullish on, and having a bearish call on Indian rupee, having a bullish call on US dollar, we believe that IT sector could be the one, and the share which I can think of is SCL Technology.
Now, I think in summary, what you want to tell is the sectors where even in the pandemic state, we see a lot of traction happening, and all these sectors, I mean, are working. And yes, we do see an impact happening from the COVID, but yes, these are the sectors where still the policies are there helping these sectors, or there is some bullish or buying happening within these sectors. Uh, I think a very insightful session, Anuj, which is there from you. And I mean, thanks a lot for this session. I feel very, very enriched with a plethora of knowledge. Uh, Now, I would hand it over to Pooja, who will give us more insights. Now, as a student, I used to wonder what should be my career path. What opportunities do we have in front of us? I mean, whether it's the right choice to take that opportunity. Should I go for a dual degree or not? So these was the doubts which used to come in my mind. To clear all these doubts, we have our esteemed panelist Pooja. Over to you, Pooja.
Hi, thanks, Vishal. Thank you, Anuj, for your such a great session. I hope our participants, which are mostly our students, would be having a good knowledge and how to invest. They'll be surely looking forward for the same. Now, for me, for Winner Zone, I would like you to take care for the career streams or career areas in finance specifically, in which we have worked upon since last so many years. And now, as a students, confusion at the time when they are in second year and final year, we always think upon various development.
I think some technical issue.
Yeah, is it audible, Vishal, now?
Yeah.
Yeah, okay. So when we talk about the career development, before that, I think we have got few psychometric test results also for few students, and those who have filled it, they must have received it in their mails, which suggest you various career options which is there with you, be it in analytics, be it in an accounts or taxation, your auditing perspective, be it in a portfolio management, law, any specific area as per your personality traits. It has been derived. So I hope that this will help you all participants to choose their career or to explore yourself. Now, when I talk about a career development, it's not only about understanding that yes, okay, I'll choose this qualification, I'll come up with the complete degree, and I'm done with it. This kind of pyramid which you can see here is completely on your entire life cycle. So, as a student, when you self assess yourself, when you evaluate your own work, your skills, your own capabilities, you do your own SWOT analysis, which says strength, weaknesses, where are your opportunities, and where are the threats which you can explore more and come up with the more opportunities. Though the entire analysis is yours. So when I was a student, I used to assess myself, or if I say as a student, when you have your exam, you prepare your own schedule, you prepare your own timetable, that okay, I'll cover these subjects at one point of time, and this is called the self assessment, your own capability. Again, after assessing yourself, you go and explore the path, you go and explore your own educational path. Either you require more training or you require a job to go forward for such specific skill and ability. And after exploring, like in the stage of exploring, you may require various mentors, various learning centers, various people are supporting you, that yes, you are going in a right direction. Once your direction is confirmed, that yes, I want to see myself at the age of 40 at this level, then you decide which qualification you need to opt for. So when we talk about a career development, this happens when you are a student. The same pyramid happens when you enter into a age of 25, then 30, then 35. So after a gap of 5 years, your priorities and your career aspirations change. And that's why we always say that these stages are always helpful for anyone whosoever is moving forward for their career path. So when we talk about a career development, first thing in your life, I would request everyone that please write every assessment in pen. Use pen paper. Try to do, try to introduce yourself with yourself, that yes, you are here and you can do this kind of things. I would like all my participants, that if you have any doubt specific to any query, you can just put it in a chat. I can see that chat and I'll try to cover all the queries simultaneously or at the end of the session if our time permits us. Now, when we talk about the development, after development, what kind of expectation or what kind of skill set CFOs or the finance head look forward? So this is actually a survey done by LinkedIn. This is not our survey. This is a survey done by the LinkedIn, and from where we have seen that this is specifically for an Indian markets, that in India, 84% of the CFO, they always want the skill set should be already confirmed and set amongst the candidate. Once they screen you, once they give you a go forward for the screening process of your interviews or vacancies, they always look forward to have a good strategic thinking. You should have a analytical thinking. There should be a good skill set for maintaining the investor relations. So when we talk about the finance perspective, all the CFOs, if I talk about a senior level, basically they always consider themselves that yes, these are the skill set which they expect from the finance student. So as a fresher, I know that we every industry knows that student don't have a experience, but yes, they have their own thinking, they have their own analysis, which is very, very important. When I used to go for an interview during our articleship, being a CA, so we have a rigorous 3 years of articleship. That time also we were a fresher, but whenever we go as an interviewee, our interviewer also expects that okay, that's fine, you don't know the answer, that's perfectly fine, but your thinking and your analysis should be at that much level that you have a skill to learn, to adapt. So there our finance companies work. Maximum graduate students who are in second year and final year students, I have always have a same query, ma'am, we don't have an experience, how we will get a job? That's your experience doesn't count, because everybody knows that you don't have an experience. How can we expect from a college student that he'll be having a 2 years or 3 years of experience? So I always tell my students, tell my all people who are always be my participants in various seminars or conferences. I tell them, you don't need to worry upon the experience. You need to worry upon your skill. Your skill set should be there. That's where our pyramid works. That's called a self-assessment. So there you have to work upon. This would be the first level to understand your areas. Now, as we move forward, I have seen that in various universities, starting from a first year going forward to a final year, you have an option of selecting various finance areas, finance subjects, which we can say. These are the broader subjects which I have written, which you guys cover when you are in a college, like financial institutions and markets, where you talk about banking, where you talk about various finance groups, financial institutions, which includes your bank, NBFCs, insurance, investment companies, and markets, which talks about a primary and secondary market of equity, of derivatives, whereby you learn all the theoretical part. But what about the practicality? Right, so when we talk about all these, I hope that you have taken few electives in your finance in first year or in third year. Generally all the technical subjects are related to second year and final year. So when we talk about the finance, well, this is the introduction, and we say this will create your base. Nobody is going to tell you what are primary markets after your graduation. So maybe you feel like, okay, these are very basic things, why should I learn these? Why should I see this as a graduate? Attempting an exam and understanding for your for sorry so for your understanding for a practical life is completely different. So whatever electives you are choosing, please assess it, please understand it from a point of view that yes, if you want to choose this subject, yes, I want to pursue this further, and try to focus on a practicalities of a specific subject, whatever you are choosing in your second year and final year, which is university specific. Now, after I know that after 12th standard, we all are super excited that we are going to a college life. We'll have a huge friend circle. We'll have a huge, complete freedom of taking our decisions our own. We can go anywhere. We'll have a fun and hanging around with friends. It's absolutely normal. So it's nothing like that you cannot do. So, but in first year, you do everything as per your own enjoyment. But as soon as you enter into a second year, you will have a complete again one question mark. Oh, what should I do further? Final year, let's complete the final year, and then we'll think about it. But majority of the students come under a question mark in a second year, that what next? What should I enter into? When you see your friends in your circle, you find, okay, someone is planning to join MBA coaching, someone is planning to join CA career or CSCMA. So they look forward for various other opportunities at the second year, because now you are at a second maturity level, where you need to think about yourself. Now what next? Now coming to a final year, till final year you're mature enough, you create your own pressure within you. Maybe someone will not tell you, but still you have your own pressure in your minds, that what to choose. Shall I go forward for the for our complete for a job, so that I can support my family? Please don't consider about supporting the family, because till second year they were doing everything for you. They have not mentioned whatever they have invested time, job, efforts, their money. But please don't think for a short term perspective. If, for example, I've seen many students from the colleges, they have this final year, they have a constraint, or they have a pressure in their own mind. No, no, ma'am, we have to support our family. I would like to join a job. किसी CA फॉर्म में, किसी छोटी फॉर्म में हमें जॉब दिलवा दो. Why is it so? Why you have such a low aspirations? Yes, I would like to only earn 14-15,000 in a month. Is it that so? If you think yourself after 5 years, you'll be reaching around maybe 30,000, not more than 35,000 after 5 years in a month. But yes, when you invest 2 years of your life in a professional courses, after 5 years, you'll not be at 35 to 30 to 35,000 slab. You'll be reaching more than maybe 2 lakh rupees. So you have to think from that perspective. That's where we call it as a compounding impact, which Anuj has also, introduced in his financial markets. I also consider this thing in my career choice also. So never ever think about a short term thing. Okay, we'll see after 3 years. What after 3 years? You'll be a simple accountant. You'll be doing some return jobs, which is at a very clerical job. So there you need to choose whether to go for a job by doing some private courses, or to go with some higher studies as a professional courses. So generally, when they think about which course to choose, maybe suppose if I as a student, I go and I see, okay, I would like to do for a consolidation work. I have a very good grip on my INDES. Okay, INDES is Indian Accounting Standards, which is in accounting, how to do a preparation and consolidation of our accounts in an Indian company, in India, basically, for all the companies who are registered under Companies Act. So when we talk about all such prospects, which field to go in? So if I say my accounting is very strong, so which area would I look forward? Maybe it's accounting. I'm good in trading. I'm good in finance. I'm good in markets. I understand all such things. Maybe I'll go to better to go for a fund manager or investment banking, where I will actually handle the money, handle the funds of any company or any individual, maybe if you start your own. So if you see at a very broader career prospects in finance, maybe includes your banking, insurance, your accounting perspective, your maybe in banking you may have a part of investment banker, fund manager, as Anuj suggests that you can be a equity analyst, right? So insurance, when you want to go into insurance, you can go for an actuarial field, or you may go to a compliances and risk. Nowadays, risk area is booming up. because of, we are having a complete modest on the industry whereby we are working on a web. So here risk is considering as a huge tool, where there are many people who are a party who are working under a risk department. So when we talk about all such career prospects, we have various areas. Other than this also, you have an opportunity, not because these are the broader career paths. If I talk about other opportunities, you may work with any of the KPO sector, which we call it as a shared services, joining a back offices, joining a IT environment, because nowadays two areas will definitely be ever, that's finance and IT. So these are the two areas which goes hand in hand. So when I talk to any of the finance student, I always recommend them not to only focus on verbally or manually that how to actually create your own accounts. Please try to learn IT, artificial intelligence, cloud computing. In fact, in auditing also, you need to understand the system processes. So for IT environment, it's really important for the finance professional to understand the IT guys. Still, we are learning, because when we have completed our CA, we don't have that much concentration on the IT development. We have learned various softwares because of it, because we were a part of a company. So I have also learned SAP, I have also learned Oracle, now various softwares wherever we go to audit firms. So this is where we actually come into picture, whereby they say finance professional can learn anything, right? So these are the other opportunities which you can think of and which you can go forward for various other finance areas. Now coming forward, then again the question comes in, whatever I have just spoken about, these are all the broader areas. Maybe various students or various participants must have think, oh, these things we already know. We don't need to understand all such things, because ये सब नाम हमने सुने हैं. I have seen one of our family relative to do this kind of job, or these profiles you have already heard about the names of such profile names. But the only again this question comes in your mind, how to achieve goal. To give you an answer of this, I'd simply say you need to understand again the first slide of my presentation, that's the pyramid, which talks about you need to assess yourself. Yes, to assessing yourself, you can be still confused. No, I don't know what skill I have. You have to go forward little in detail by maybe attempting few psychometric tests, by interacting with your mentors, if you have few mentors, or go to a college, speak to your teachers who has already have experience of handling so many students, to understand the career. You have to check out all the options which is available in your hand, and then you have to assess it. So to determine the goal, that what you want to do it, that's the only path that will only give you a direction, that how to go for it. So for example, if when I was a student in a school, I was very fascinated with the book law books. I really loved to visit my uncle's office, where he had a huge office with a huge huge cupboard, books of cupboards, which is really enticing me every time whenever I visited his office. So there I had a plan that, okay, how to get this thing, how to get this cupboard, books of cupboards. So when I talk about all such things, it's not like that it's a material thing. It's like, even in fact in that time also, I didn't know that yes, this is my goal. And he was a chartered accountant, he was my father's CA. So I used to enjoy his work. Yeah, whatever he's doing, that time it was all manual. But now when I started after 12th, I started exploring it. Okay, how to become a CA, how to what kind of exams it is there. I know, I am very well confident. If you think that many of us, we say, no, these professional courses are very tough. How do you know it's tough? Who has told you it's tough? Have you visited their specific websites? Have you visited any of the website? If you talk about MBA, have you visited a specific B school's website? Have you gone to IIM's, any top B school, or any MDI Gurgaon, LBS, IIFT? So any of the website have you ever visited where you find good, aspirations to go forward? I think that there are majority of the students have never visited those websites. Only speaking to to your friends, to your family, no, it's very tough. Tough is nothing. It's between you and your friends. If you're for your friend, it may be tough, but for you, it may be achievable, right? So whenever you talk about a goal, whatever you assess yourself, please look forward. You guys are a techo savvy guys. You have everything in your hand. You don't need to go anywhere for understanding all such things. So go and Google. You will find each and every aspect of your career path, of your detailed curriculum, eligibility, everything is available, whereby you can understand, okay, these are the subjects which I want to do, and then assess yourself. So to achieve this goal, it's very, very important to first of all give time to yourself and understand the entire procedure of getting that goal done. So when we just like I have just highlighted few courses in my saying, there are few courses right now also which has never come as a faded career options. It has always been into a highly demanding industry specific sectors, and I would rather say that whenever you decide that yes, I want to do, say for example, I want to do MBA. Okay, so when you think of MBA, you need to you need to elaborate and define the entire path of doing an MBA. So just to heard about it and determining, okay, I'll do MBA. What you will do in MBA? What kind of job they do? What kind of campuses they have? Do we have a job opportunities? Yes, we do have, but still you have to put a ceiling limit over there that yes, I would like to enroll MBA in a B school, right? If I want to say I want to be a CA, so you need in such certifications, it's not like that if you are a CA you have to only do accounting job. I am a CA, I am not doing accounting job now. I am a system auditor, or I'm just entering into academics because that's my passion coming up. So whenever talking about the certification course, this will only give you a your horizons get so expanded that you will never get fear from any of your struggle coming into your careers. So we have after class 12th, uh, like when people decides in 12th standard that yes, I want to do this course, we have CA here in India, that's chartered accountancy course. We have cost and management accountant course with CMA. You can start your law. We have 7 NLUs, national law universities in India, which is having a huge the 7 most famous law universities in India, whereby you can give an entrance after 12th standard, and you can enroll. You can be a part of such exam of your such universities, and this is a regular course of 5 years. And if you want to do a master's in law, that you can do after 5 years of your law course, that's LLB. Then we have a company secretary course. If you want to go in a compliances or a company secretarial work, you can be a CS. Again, you can start with after your 12th standard. Earlier we have a subjective papers, 4 subjective papers as a foundation. Now they have changed into a mock MCQ exams for the CS also from this attempt. We have SEMA. It's also coming up, pacing up. It's not an Indian certification. And nowadays, many students are enrolling for ACCA. We have 14 exams in ACCA, and initially, students have this thing that CA and ACCA are equal. I would like to give a clarity that they are not equal, because ACCA is completely a accountancy job. If you see subjects also, they all are related to accounting, cost accounting, financial management, management accounting, corporate accounting. So everything related to accounts would be there, and they are not at par here in India. But yes, you may get a accounting job across world, across globe, because that's a US certification. After graduation, yeah, fine. And during final year only, you are eligible to give your MBA entrance test, which comes under last Sunday of November. And when you are into a final year, you may enroll yourself for the MBA entrance exam. And generally, all the institutes have exams starting from after October till December, and then afterwards they have a GD and PIs, which has been changed now. Few B schools have changed the concept of group discussions, because there is a limitation that many students who are very much intelligent, but they don't have a chance, they don't get a chance to speak up when they are discussing in a GD. So now they are coming up with that they have to submit essays, write-ups, basically some 200, 400 words on specific topic, which they have to write it then and there only when they ask for the GDs. And then they have a PIs, that's personal interview, which is a complete procedure of MBA, which is defined nowadays. Then we have another course which is coming up at a very high pace is CFA and FRM. There is a difference between CFA and FRM. There is a lot of confusion. When we talk about CFA, it's actually completely into an analyst job, where we talk about an equity analyst or investment analyst. So they work on a, basically they work more on a investment side. And when we talk about FRM, they generally manage our risk. So risk is not specifically related to bank or investment banking. FRM is they're industry specific, and they are more into a risk calculations and risk and return, basically, which is nowhere mentioned. A very less proportion is mentioned in CFA. So both the profiles are completely different doing CFA and FRM. Yes, they have levels. In CFA also you have 3 levels, and level 1 you can attempt it after your graduation. Generally level 3 we recommend to do level 3 after having some experience in industry, because they are very, very practical, as we have in CA. But in CA we have articleship, so we get a practical exposure. And CFA level 3 is like what same, in which you have centers here now in India. We have twice a year, twice in a year the exams get attempted. The another portion which generally students go for a banking PO paper. So every bank, we have this centralized IBPS PO concept, whereby various vacancies come into from various banks related to their branches. And once you clear this banking PO exam, then your placement will be done as per the interview done by the banks. So this is entirely on a MCQ basis. They have their own centers. When you fill the form, you'll get all the details in the website, and you need to fill the form. Their examination dates are always specific, and their centers are across India. You can choose your center, and it's all MCQ on a basis of logical reasoning, verbal, and basically the complete analytical part. And after post graduation, many people go for a teaching perspective, because teaching and education is completely passionate, and it's now coming up as a very hard competition in that industry as well. So UGC, that's University Grant Commission, they have put a eligibility that if you want to be a lecturer in a college, you should be a UGC qualified, which is again twice in a year. They conduct their exams in June and December, and they have their paper pattern, which means that in a day you have to give 3 papers, in which first paper comprises of a teaching, basically it relates to your methodology, MCQ again, and then your another paper would be related to your specific course, like which field you have opted for, like for maybe finance, commerce, economics, whatever subject you have chosen, you have to give the exam, which is a written exam. And after that you be a UGC qualified person. That means you are eligible for a lecturer in any of the college. And if you want to be a professor, you want to add DR dot prefix in your name, then you have to complete your PhD, which is affiliated from various universities in India. So you can be a doctoral after your graduation and completing your post graduation, and then you can opt for the PhD, which is more like a research work on a specific topic. So these are the basic certifications. Now there is a very simple, there is one question which always come in the mind nowadays, actually, because of the COVID impact, like how we see ourselves as a job market. Like, do we have actually a job opportunities for graduate student in industry, in any of the industry? Maybe few comments must have come here that we don't see ourselves, if we do MBA and we will find any job here because of the existing situation across globe. I would just elaborate more on it. Like GCR, that's global COVID recession. I know it has presented numerous challenges for every country, not for India, for every country across globe, which makes difficult for industries to survive and strive for it. But still, they have ushered an era of opportunities for a new age industries to sprout. So when we talk about a new age industries, they are also worried. They are also coming up with a few more ideas and few more edtech companies so that they can run their businesses. Otherwise, it's really difficult to survive also for them. So now every industry is forcefully, they'll be forced to reform and restructure in order to transform into a new realities that will emerge maybe after 3 months or 4 months of our time. So we call it as, I call it as into three factors which leads to a transformation. One is planning and execution, which we call it as a agility, that they have to plan and execute in such a manner to make their company successful and to again revive the entire situation which is there since last 3 months. They have to come up with a digital transformation for their products and services. They have to go from physical portal, they have to change their point of sale, post sale, to digital system, mobile technology payments. So everything is being changed. When we talk about, and they have to take care, handle the people management and the processes to be set up, because now maximum industries are moving themselves to a work from home culture. In fact, if you have heard about Google also, Google is also, he has also, Mr. Sundar Pichai, he has also mentioned that we are not well equipped with the updated laptops, because of which we are deficient of the laptops to arrange for our for our employees, and they are still working on it. But yes, when we talk about the job opportunities, yes, there would be all job opportunities, but it will take time. So the entire scenario is same for everyone, whereby we see ourselves, yes, we have to bear this time along with us, but along with this time, I think you should spend more time on a learning, because as I said, you should more focus on few other courses or few other new learnings apart from just focusing on that we want a job. Because these are the learnings which you are doing it, you will never get a good time again in future to have your own learnings, own interest to explore, and then finding your correct path. So if you think that yes, I'm not good in, suppose in IT, I want to learn IT, I need to understand Excel spreadsheets very fast, I need to work upon it, try to join some good learning centers and try to do it, because now everything is available at your own doorstep. So there is a lot of changes now. You don't need to waste your time in traveling, or in, and you don't need to put your efforts to reach to one destination. So you need to elaborate it more. So during this time, please increase your learning levels so that you can capitalize it in future. This is not going to be long last. This is a new normal, and you will find new things, new opportunities coming up, which we are also waiting for, and we are getting ready for it. Okay, so how we can help you in the entire scenario of doing it? As I mentioned, that winner zone is not only for the teachers, that we take teachers who are completely academicians. They really help you, they really mentor you during your college time. But here our focus is that you should interact with the industry specific people. You should know how they feel when they interact with you. They have a huge pool of knowledge which we want them to share it with you. So if I talk about various industry people, they are ready to come up with us. So all the faculties here in Winner Zone is all highly qualified people. They all are either chartered accountants, CFA, CS, MBAs from a very top B schools. They don't have a they have just a passion to educate people, to give their learning and share with various people. So when we talk about our Winner Zone, how we can help you, we have a learning basis on the concepts, as we have a vision that we should work on a conceptual knowledge instead of just learning with the sight of preparing. So we don't prepare only for the exams, we prepare you for your life. So be it a technology, be it a economy, be it a region wise, we have to have a effective learning. So you should have a we are coming up with various other courses also. One of the course which we are going to start for the stock markets itself, we are splitting those courses into two parts. One would be the basic course, which is basically on equity market specifically, because as a student they mainly focus on how to actually invest equity. There are many participants, they actually don't know that how many accounts you need to handle it, how to trade in a stock market, how it looks like. Maybe you have learned, you have completely everything during your books, right? You know what, we have two kinds of market, primary and secondary. But actually how it looks like, do we have such kind of, do we need some trading account or demat account? Maybe they don't have only. So we are starting up with a basic course very short, very soon, and you will get all the details in our website also. This would be the 20 to 25 hours course with various speakers again. And another course would be the advanced level course, which whereby we are covering as a trader, which we call it as a derivative market, futures and options basically, to understand the entire markets, whereby you see that people are just quickly earning. So it is not a quick earning, it's a learning first of all, and then they are applying their learning to a quick earning. So these are the two courses which it is in pipeline. And third, we are going to add a spreadsheet learning, Excel learning, which we have a huge highly faculties with us who are industry experts. They have a huge knowledge about the Excel, and we are coming up with the limited participants to enter into such courses of 5 days to 2 hours course. So we are coming up with all such scenarios, and our team is working on it very hard for you guys. So anything which you think that yes, it can assist you in your developing your career path, we are just getting ready for all such things to make it public for all of us. So I hope that I have covered maximum of it, and you need to, I always emphasize that please prepare yourself for a future. Not, you need to prepare yourself, you have to create yourself today to get your future. If you think that okay, I'll do it tomorrow, that's not by uh, that's not happening. You have to put your entire efforts and hard work today only, and then you will get the results tomorrow. So I think I have covered maximum of the queries which have come up in our mails, in our messages, or in our chats if we have. And any other thing, if you want to guys add it, please uh, send me the send your we are live here, so you can send your queries here in chat. We can see and we can answer. Anuj is also there. If you have any query related to financial markets, please feel free to add here. We would like to clear your doubt. I think Anuj, are you there, Anuj? Yeah. So
Yeah, Pooja.
Anuj, I think there is one query which says by Siddesh Chaudhary that can we see one more correction in markets?
Yeah, Siddheshji, there is a possibility that there could be one more price-wise correction. Correction are two kind of there are two kind of correction. One is time-wise, one is value-wise. Value-wise correction we have seen 12,500 dropping all the way to the 7,500 in market, and portfolio have taken a beating of anywhere between 30 to 50%. So value-wise correction has already been done in market, and now the time-wise correction, or in technical terms or in market terms, we call it a consolidation phase. So one consolidation phase is surely needed. So market will remain range bound. That is what we expect. Downside is limited. In the short term, it is limited to around 85, 8300. On higher side, it is 10,000 or so. So that is around 1500 points range in which market can trade for next couple of months. And once the things will get stabilized, only then you will see a rebound in this market. So for portfolio construction, as I said earlier, this is the best time. One should start deploying money slowly and gradually in good stocks, and keep those investment for at least 2 plus years, and I'm sure that one is going to get a very decent return from equity markets.
Yeah, I hope that this will solve your query. And there is another uh, question which has come that please tell us one stock for double investment.
Well, it's very difficult to say the double the investment is okay, but he has not given any time frame that it has to be in 6 months or 1 year or 2 year. So I'll take a leeway that okay, it is for more than 2 years or so. Ideas we have talked about earlier, like Rallis India, IDFC First Bank, and these are the stocks which we are looking that they can be a very good multiplier from these levels, even from these levels. So one can look at these stocks which we talked about. And surely in BFSI segment, IDFC First Bank is something which we are looking at.
Yeah. Are you
Yeah,
there, Anuj? Yeah.
yeah, yeah.
Okay. So there is another query that do let me know if Cadillac, Lupin are the good shares to invest in.
Mm, yeah, both the pharma sector shares, they have performed really well in last, and in last 1.5, 2 months, all pharma companies have performed very well because of the COVID scenario. That's the only sector which has which has given very decent return in last 2 months, and anywhere between 50 to 70% kind of return. So the stocks which you talked about, Cadila Healthcare and Lupin, both the stocks have gone up very sharply. Cadila is trading around 350, moved up from 220, 230. So very sharp up move has come in. So it's a good investment idea. Slowly and gradually start deploying in the money. For me, a good range to buy this stock will be anywhere between 300 and 275. So that's the range I'll be looking at to deploy my money in Cadila. Uh, if you talked about Lupin, Lupin is again very big pharma company, very big name in pharma sector. But as all these pharma stocks, even this has gone up very sharply from 600 levels to around 900, around 50% return in 2 months. So some sideways consolidation is needed, and I'll be comfortable in buying Lupin anywhere close to around 650, 700 range.
Okay, great. Any other query, Vishal, you can see? I think,
Yeah.
yeah.
So one more query, which is coming from Puneet Ghai. Which would be better for normal investors? Mutual fund, stocks, and if mutual fund, then which route would be better, direct investment or via distributors?
Look, if you want to invest and don't want to look at know your company, the ideas which I talked about, that you don't want to invest your time in when you are making your own portfolio. If you don't want to invest that kind of time, then it's better you go through the mutual fund and all, or maybe some PMS schemes, some portfolio. There are many broking houses which are providing PMS services, and in our LFS also we provide portfolio management services. So one can do these kind of what you say. Uh, can apply through mutual fund if you are not able to dedicate your time. But if you are able to dedicate your time, and if you are really good at doing your own research, then it's better you earn your own money and start investing on your own. But I know it is very difficult, so it's better that you have somebody who can guide you, who can help you to find those investment gems, because in market around 6,000 companies are listed, around 2,500 companies are traded every day. So out of those 2,500 companies, getting those 20 ideas is not easy. So to have a knowledgeable person by your side, maybe as a fund manager, maybe as a portfolio manager, or maybe just as an investment advisor, will be a good idea.
Pooja, I think this one is for you. Is Harsh
Yeah.
asked us that is certified financial planner good option after graduation?
Okay, so when we talk about a financial planner course, these are the short-term courses given by various institutes. But if you want to take CFP course, please take it from the approved SEBI approved courses, which is available. I think it's for 5 months. Earlier it was for 7 months. Now it has been reduced to 5 months with their video assessments and various other good experienced faculties as such. And but yes, for CFP it's a short term course. It work as a supplementary to your education. So if you're doing it, it will increase your horizon to understand the various practicality of accounting and your entirely financial matters. So yes, you can do it with your graduation. You can enroll it along with your graduation as well, which is in a final year. And please go forward for the certified courses, approved SEBI approved courses. Don't do from any private institutes because they don't have that much value, which as compared to you. Obviously, we have a SEBI authorized organization in India. So would recommend that if you want, you can do it.
And I think the
Yeah.
last question, which I would take in the interest of time, it's coming from Prasenjit, and this one is for you, Anuj. He wants to understand something more about PMS.
Yeah, so PMS is a portfolio management services which broking houses opt for to manage their clients' money in equity market. As I said, that it's not easy to devote that kind of time for everyone and make his own portfolio. So it's better you have somebody on your side who can manage that money from on behalf of you in the market. So PMS is one thing which is approved by SEBI. So it is approved by SEBI, and you have to come in different schemes which are provided by the different broking houses, and the scheme is managed by a fund manager, and it is his pure discretionary that what he wants to buy or what he wants to sell at what price.
Sure. Great, helpful. I think a helpful session. Thanks a lot, Anuj. Thanks a lot, Pooja, for your time, and thanks to each of the participants for spending their time and enriching yourselves. Looking forward. Happy learning. Bye. Take care.
Bye bye.
Bye.
Anyways, Vishal, I just need 2 minutes to say thanks to all of you.
Okay.
I would like to thank my entire team who has put us on a successful venture, and along with all my participants who have patiently heard us. Along with it, I would like to thank Rotra Club of SIS Sign East Mumbai. I think they have there's many students have watched us today, and I hope that we will continue with such happy learning with you guys, and will come up with more initiatives and more inputs from our side. So thank you, Rotra Club of SIS. Thank you, my Winner Zone team. I always cherish and I always look forward that we will be together for and all other sessions together, so to make it successful. Thank you guys. Thank you for your time. I'm logging off now. Bye bye.
Bye.